Good afternoon, good morning, happy
Good
Sunday,
evening.
everyone.
The Truman Show again, remember?
Good evening for those who are going to be watching us from further east.
Yeah.
Happy Sunday, everyone, and welcome to yet again another episode of.
The weekly market recap with Joseph Virgilio and Irfan.
Yeah, Joseph, tell us a little bit about you.
For those who don't know me, I'm a hedge fund manager with over 25 years of Wall Street experience, grandfather of sustainable finance, having launched the very first sustainability focused hedge fund back in 2004 in New York.
So, grandfather, huh? That must be
Uh,
making you feel pretty old.
that's what some people call me, although that makes me feel much older than I really am. But Irfan, what is the statistic of the week? This is a
Oh
good
my
one.
goodness, we always have some incredible statistics here, and this is just mind-boggling. Listen to this, folks. A study by Hendrik Bessembinder, did I pronounce that right?
Correct.
Yeah. Showed that, listen up, only 4%, 1 in 25 stocks accounted for nearly all of the net gains for the entire US stock market from 1926 to 2016.
Imagine. And that's
Joseph,
why,
how's that possible? We should just say, well, then we should just identify the 4% that perform well and just forget about the rest.
good luck doing that. If you have a crystal ball,
Oh,
sure. And that's why it's important to own an index and not try to stock pick on your own, especially if you don't have the financial skills to stock pick. So you even professional analysts who do this for a living, who crunch numbers all day long for a living, get it wrong. So trying to do it yourself, that's why stick with an index and you'll be fine. Long term, you'll always win.
okay. All right then.
Yeah.
Let's get into it. This week was a bit of a roller coaster, wasn't it?
Pretty, pretty crazy. I mean, we touched the S&P 500 touched a new high earlier in the week, and then they got slapped around along with the Nasdaq throughout the end of the week. Um, and there's a little bit of rotation going on. It seems like there's money coming out of big tech again. This is continuing. I mean, it was there. It stopped for a little bit, but now it seems like it's resuming. And I see that some of the defensive sectors are the ones that are benefiting from inflows. That's staples, utilities. Those are that I've seen. The tech stocks are a bit under pressure. I think it's a bit overdone. 2 days of really massive sell-off. Let's see what brings us tomorrow. I'll have a better picture on support levels because the S&P 500 and the Nasdaq are sitting on crucial support levels right now, and if they breach those tomorrow, we will have to assess the situation quickly.
So
That's
you mentioned staple stocks just a few seconds ago. Just for those who might not quite understand what it is, that includes things like consumer goods, right? For
correct.
instance.
So staples, so they're consumer stocks are divided into two categories: consumer discretionary, so cars, luxury brands, and staples, which are the companies that produce stuff that we need every day. So whether it's food or cleaning products, Procter and Gamble, Danone would be one of the, or Pepsi. These are
Yeah.
these are consumer staple companies that produce stuff that we eat and buy pretty much every day, and that we hardly could do without. That's why staples, right?
hmm Okay. Yeah. No, obviously, I knew about that, but I thought, for
Oh,
our
of course.
audience, obviously, we are catering to a pretty wide audience, so it's important for them to also understand the terminology, the definition of the terminology we use.
Definitely.
Okay. All right. So you got some U.S. economic data to share, right?
Yeah, the Fed stayed put. They didn't cut the rate. They didn't cut rates like I had said and mentioned last Sunday when I said it would be a nothing burger, and you laughed. Remember that? So yeah, so that's exactly what happened. I think that what's really there was also the announcement of the new chairman of the Federal Reserve, Warsh. So
Yeah.
Kevin Warsh, I actually know him personally, but a lot of people don't. I think he's a good guy. I think it's a safe choice for Trump, as opposed to like
So he's
Kevin,
qualified, right? You think
yeah,
he's
as opposed to
qualified?
like a Kevin Hassett, was being thrown around earlier in the month as the preferred runner, the front runner for Fed chairman, and I think he's a joke. I mean, definitely a joke. So Kevin Warsh brings back a bit of respectability, but a lot of people have criticized him in the past for the handling of of certain whatever negotiations were being done during the financial crisis, with Hank Paulson being the Treasury Secretary back then. So he's been criticized for certain moves that he's made, but I think he's a respectable candidate for Fed chairman. I think he's an inflation guy. He's like, if inflation is under control, then everything works. But the dual mandate of the Federal Reserve is price stability and full employment. So he focuses more on inflation, and he's been recently. So he's been a hawk most of his life. So he's always wanted rates high, but for some reason or another, recently he's been singing a different tune, perhaps to catch Trump's attention and say, "Me, please, make me the new Fed chairman." But so we'll see. But again, I think that Kevin represents what Trump has tried to do with Powell, which is to politicize the Federal Reserve. Kevin Warsh is of the establishment, so he wouldn't allow the politicization of the Federal Reserve. He wants to keep it independent. That's who he is. He's an institutionalist,
Okay, so I mean, but Trump tried to do this with Powell. He didn't succeed,
And I don't think he's going
but
to
he's not going to
succeed.
succeed with Warsh either, then, right?
He won't. He won't. I mean, look. Every time Trump tried to politicize the Federal Reserve, the market got spooked, because the last thing the market wants is some sort of an unqualified individual such as Trump, arguing for a 3% rate cut in the face of sticking inflation. You don't want a market. You don't want a Fed that responds to a president that doesn't know anything about economics. Trump is clueless. He understands nothing. I mean, so anyways, so I think that it's a safe bet. Kevin Warsh is a safe bet. Let's see how he pans out. If I can't possibly see myself say. Say Trump would have nominated me, for example, I wouldn't accept it. I wouldn't accept to work with somebody like him, because I'd be under pressure every day, all day, every second of the day.
Would
And it's
you
not
have
something.
felt qualified?
So
Would you
who
have
knows?
felt qualified to do so?
Well, the one thing I can see is, like, just like Powell, Kevin is. They're very patient people. Both of them are extremely patient.
Yeah, that's not going to work for you.
Really freaking patient. So, but anyways. Yeah.
But would you have felt qualified
No,
to be a candidate for that?
No.
Oh, okay.
I mean, no way. I don't have enough experience for it. There's no way in hell. I'll manage money, but I can't be the chairman of a central bank. No way.
Yeah.
Maybe in the state of, maybe in the state of Burundi, maybe, but not in the United States.
Who knows? Maybe they're looking.
Too complicated of an economy.
All right, we got another couple topics to go over quickly.
Yeah,
One is gold and silver. What's up with gold and silver?
So on Friday, silver lost close to 30% in one day. And gold did the same exact thing. Well, not the same, but dropped heavily, around 10, 11%.
But that was after peaking to a new highs, right?
Absurd new highs. The run on these two assets, on these two precious metals, has been just staggering. So I I think that now well, of course, there's been a lot of profit taking, but I don't know. A lot of people are speculating that the sell off of the market on Friday, and that the sell off on precious metals was directly related to Kevin Warsh being the front runner for. I don't know that's the case. I think that there's a lot more going on in terms of dynamics here. Well, for one thing, I can say this. Kevin Warsh is known as a guy who wants to tackle inflation. So gold is an inflation hedge. And there was a reason for that to come down a little bit and say, okay, if he succeeds in his intent to lower inflation even more, okay, so gold doesn't have that much of a reason to be in my portfolio, for example, right? Because inflation is going to go down. But silver, my God, silver got slapped. Like, and it was funny because my wife was asking me just the other day, like, I see gold going up and we don't have any gold. I'm like, I'm not chasing gold or silver here. This is like a day before she was saying, why don't we own gold? I hear that it keeps going up. I'm like, because it's been going up aggressively and I don't want to be caught buying it and then it's going to sell off on me. And so the following day when she saw gold come down 10% and then silver down 30%, she was like, Jesus Christ, you were right, Joe. See, that's one of the reasons why you don't want to chase, these types of asset classes, these types of assets.
Yeah, the higher you climb, the steeper the fall, right?
Oh, this is, and at one point, silver was actually, the value of silver was higher than, I was reading this statistic, I'm not going to say it because I don't remember the details of it, but nevertheless, it was an absurd statistic, which I don't remember most of the details, and I don't want to go get it wrong. But anyways, it was just ridiculous. I mean, silver's been below 20, had been below $20 for decades, and all of a sudden now it's 120, 118, whatever the heck. Just too crazy.
Wow.
Yeah.
Last but not least,
the stock of the week:
Nordex and Siemens.
Yes. Okay. So I wanted to make this distinction. So Nordex SE. It's a German company that produces wind turbines.
Okay.
And
so like competing with the likes of Vestas and those kinds of
correct,
things.
and Siemens Energy. And so then they have a very similar business model. So Nordex and Siemens Energy have a very similar business model. They are geographically in the same markets, and Siemens went from 25 to over 100 last year, euros per share. And so, granted, Siemens, it's a much bigger company. It was even before, there was first initially a few years ago, the merger between Gamesa and Siemens Energy. Now it's just Siemens Energy. All the dynamics, right? Anyways, if Nordex can do only a quarter of what Siemens Energy has been doing, because Siemens Energy also focuses on the wind turbines, this stock can be easily $50 to $60, and it's trading around 30, 32 now. So I like Nordex for the simple reason it's a little expensive. It's a little slightly on P's a little bit high, around 40, I think it was last time I checked. I could be wrong, but they're executing quite well. And if they can replicate, like I said, only a quarter of the business that Siemens Energy has, I see bright future for this company. And I like the space.
Besides reminding people that obviously this is not investment advice,
that's
and
absolutely
people
correct.
Should talk to their own investment advisor. Are these both present on the Frankfurt Stock Exchange?
Yes. Absolutely. Both of them are. Okay. Yes. Siemens Energy, you can also buy it as an ADR in New York, but I always prefer to buy stocks on their original, the primary market listing, because they're more liquid. So yes, but Irfan is absolutely right. This is my portfolio. I am discussing what I like. Please always consult with your financial advisor before you buy and sell anything that you hear on the web. Every person has a different situation, and I don't want anyone to construe this as investment advice. This is just a conversation of things that I like.
Why don't we also mention what AGR is, since you mentioned
ADR? ADR is an American Depositary Receipt, which means that Absent voting rights, you can buy a stock that it's listed on some other foreign exchange. If they list it in New York, you can do it through that, but you will not have any voting rights. The sponsoring bank will vote on the shares.
Okay. So
Has
that's
the
the
rights.
only discrepancy.
Correct.
Okay.
Correct.
All right.
And just everybody, don't forget to help us out. You can comment, like the video, follow us by subscribing to the channel, and sharing whatever we say with others. Just to
Yeah, and
spread out.
I will also add, please do come and comment, even if you do have, by all means, if you do not agree on something for whatever reason, please do come
Write it right
and
here.
mention it.
That's it.
Exactly, right in the comments. I had a friend, Joseph, last week who said, "Oh yeah, interesting video. But to be honest, I don't really agree with something that you guys talked about." I said, "Well, that's absolutely fine. Just go
Perfect.
and
Perfect.
talk about it. I mean, let's discuss about it. I mean,
Well, then you let me know what it is that he wasn't you didn't agree with.
I think it was about last week we talked about Alstom
Yeah.
and about Alstom's growth being partly due to green hydrogen or fuel cells, sorry.
Yeah, it's that they were introducing fuel cells
They were introducing fuel
in
cells.
their
Now,
cars,
I think
their
what he
tram
was
cars.
saying is, if I remember correctly, my friend was saying that, yeah, but that is highly dependent on whether the European Union is going to grant, how do you call them, benefits, sort of incentives
But
to make it.
Alstom has a global presence, and they've been introducing these in other countries. So it's not that we're waiting for the European Union to do or say anything. I mean, it's they could they're moving along with other countries that already have a legislative agenda that incentivizes these types of renewables or clean energy or lower footprint devices. And in the case of Alstom, they've been supplying. I think it was China. It was the most recent announcement that they were supplying China with fuel cell trams for the city of Shanghai. I thought it was. This was a while back. I just don't remember. But they're moving in that direction. If they're moving in that direction, it doesn't matter whether you're okay. Great. If the European Union passes legislation, but they are pro. The EU is pro clean energy, smaller footprint. I don't see why would they not have incentives in the future. But nevertheless, the technology's there, and Alstom is delivering it.
Mm-hmm.
That's all.
Okay. Good one. Well, then I guess we can wrap up this session as well. And thank you everyone for following us. Again, please like, subscribe,
share, comment,
share.
And
feel free to suggest topics you would like us to talk about a bit more in detail.
Absolutely. Feel free to suggest what you want to hear from us about. Have a great Sunday, everybody, and we'll speak next week.
Yep. Bye, everyone.
Bye.